So that mentality of having instant gratification. And so just really analyzing, is this something I need? Or is it just something that is, I want it, sacrificing for what you want now for, later, and having savings is huge. What do you want most? What do you want right now versus what do you want most? And so if you think about what you're trying to do long term and not having that stress and not having that build up, that is huge.
Hey, before we get started today, I've got our king of data, Andrew Pratt, with us. I want to talk just a few minutes about what's happening in the markets. To be honest with you, I reluctantly talk about this at times because I don't think we should be focused on events in the market like what's happened in the last week. At Wiser, we are planners, and we have already planned for something way worse than this, right? But I do think it's important to understand why things are happening, but I don't think it's healthy to be focused on your brokerage account, your 401k, and the value. When you know that you have a long-term healthy asset allocation, you know that you're focused long-term, and we're not day traders. But regardless, people will start reaching out if we don't kind of nip this in the bud right now. So let's talk a little bit about the last week. I mean, I think the futures as of this recording are up 250 points. So we might have a bounce back today, but we're 5% off our highs right now?
From the highs, we're down about 8.5%, but year to date, the S&P 500 is still up like 9.5%. So, we're still up, fairly good since the beginning of the year.
So what are the concerns? What's causing all this?
There's a few factors at play right now. I think it all started late last week when there's some of the economic data came out. There's this SOM rule that the market sort of got spooked with, in regards to unemployment. That's where, when unemployment increases by 0.5% on a 3-month average from its low, usually that has always preceded a recession. So the market, when that unemployment data came out, the market saw that was triggered, and I think they got spooked because they also know that rates are going lower. The other thing is, across the globe, Japan's, their currency was crashing basically because a lot of institutions and investors do this carry trade, which is where they are borrowing low interest rate currency and investing in high interest rate currencies across the globe. And basically Japan raised their interest rate by 1/4 point. It's most likely that the U.S. is lowering their interest rate by 1/4 point. So that just sort of blew up all these carry trades. And, a lot of these are leveraged. So, leverage has a very fast acceleration effect. And so a lot of things I think we're just sort of unwinding and digesting that news. And, I think just in general, typically, although, economic data is sort of mixed, there's a lot of positives, a lot of negatives. I think that's always the case. But, every time the U.S. Has cut interest rates, it's always been sort of due to economic contraction. So I think just the more higher probability that rates will be cut very soon. The market doesn't really like that necessarily.
But is it not this time that they're cutting rates because rates are just too high? That it has nothing to do with economic contraction. It's the fact that the Fed's been trying to do this for 3 years.
They've been trying to telegraph that, and they probably are too slow to it.
And they're succeeding. Right. The market doesn't see it that way.
Well, now, I think what's coming out is they might have to do an emergency cut because, who knows how this actually plays out. But a lot of people believe that, interest rates have a lag effect, and it usually takes about 12 months or longer to sort of trickle in through the economy. And so even if they cut rates, that could also have a lagged effect too. So I think, now it's like, okay, conditions are maybe a little bit too tight and we need a cut because growth is slowing, inflation is slowing, which is good, but also growth is slowing, which is not good for equity prices.
Yeah. So what's our reaction as portfolio managers in all this?
Stay invested. That's really the main thing. And, I was responding to a client yesterday, and there's a lot of studies out there, but, I mentioned to this particular client that, over the past 20 years, if you miss the 10 best days, by trying to time the market, your portfolio value, in a lot of these case studies is reduced by half. Yeah. So over the past 20 years, just say you had $10,000 and you left it invested, it ranges depending on the time period, but usually I think it comes around to about $70,000, about 7X. If you miss the 10 best days, which often occur during bear markets, that, leads to the portfolio value to being about, 30,000.
It's basically when you go to cash at that point, it's no longer investing, it's gambling.
Yes.
Because you have to be right on the exit. You have to be right on the entry.
That's the key. You have to make two right calls, which is very difficult to do.
And you have to do it before the market moves up.
Right.
So a lot of times people don't reinvest until they feel better. Well, they feel better after the market's already rebounded and they've left so much on the table. And what I tell people too is you don't get to trade the market overnight.
Right.
So you could open up 1,000 points. So if someone sold yesterday at the close and they bought back this morning, right, when we had the futures is up, you missed at least 250 points.
Exactly. And I mean, just like right now, the futures are pricing in about a 1% to 2%, pre-market moves. Who knows what will happen today? But, if you sold yesterday, you could potentially miss out on that or even more.
So I think and this will vary by client, but there are a couple of things we can do in times of extreme volatility like this. Number one is tax loss harvesting. So in a brokerage account, when you have sudden drops, you have losses, especially for new investors, people that are new dollars in your account, I should say, not new investors. So you can immediately take and tax loss harvest that, which you did for our client base yesterday.
Yeah, I went through all of our taxable accounts and every client that had, a meaningful value. And when I say meaningful, where it makes sense to trade from a tax loss harvest standpoint, I went through all those accounts yesterday and traded. So we tax loss harvested for taxable accounts yesterday. And then also too, just, I want to say as a reminder, this is what, if you're in a more moderate risk model or, to not even 100% equity risk model where you have fixed income in the portfolio, this is where fixed income shines through. And that's what it's there for, is to provide liquidity and diversification in these.
Because bonds are up right now.
Yes, exactly.
Yeah. And so then the second thing that we'll do if there's an opportunity is rebalancing. So that's where the bonds have gone up in value, the stocks have gone down in value, and you basically sell the bonds for gains. You buy stock at a cheaper price. We did that during COVID and did really well that year in the rebounds. Not quite time for that yet in the portfolios. We're showing almost all portfolios are in their risk band, in their risk tolerance. Partially because we had such a fast run up in the market. The market's just coming back down. We're still up on the year. Yeah. So there's really not any rebalancing opportunities yet. Hopefully we don't get to that.
Right.
But it is a way to add a rate of return to the portfolio by doing these rebalances. So that's the important part. And, it's frustrating to see values go down. But this is just part of it. You can't have a market that goes straight up. That's not logical.
Right. Yeah. It's really, it's healthy for the market. And, before this correction, we saw, you just can't have 7 stocks go up forever and call it a day. We saw a rotation into more of the small mid-cap names in the U.S. market, which is actually a very healthy sign, and that, the bull market is probably still intact.
Yep.
But, it's normal to have corrections. It's normal to have one or maybe even more than one 5% sell-off in a year. We just got to remember that and stay the course.
Great. Thank you, Andrew.
Thanks.
Welcome to a Wiser Retirement Podcast. We believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom today is my co-host, Shawna Theriault. Today, we are going to talk about the struggle with instant gratification, how it might be ruining your financial goals. But before we get started, I have a major announcement.
Major.
Wiser got a major award.
Tell us.
We should announce this at Christmas time. Remember the Christmas story? Fragile. No, so there's this website called expertise.com. Sounds kind of hokey, right? We won this award last year and we kind of blew it off. And we're like, because we get these things all the time. Hey, you won an award, and they want you to buy the plaque, and that's how they make money.
Right.
And I'm like, that's not an award. That's a
marketing strategy.
I know a couple of advisors that would probably be like, oh, I won this award and pound their chest. And I'm like, that's not a real award. You pay to play, right?
Right.
Well, expertise.com like sends secret shoppers. Right. So we have had somebody probably interview us at some point.
Yeah.
And anyway, so we were named as, I think they had 17 or 14, something like that, firms, financial advisory firms in the Atlanta area. And you go through the list, and I know a lot of those firms, and those are legit firms. So I was like, that's pretty cool.
Yeah.
We were right up there with some of the best elite firms in Georgia. So
Absolutely.
Congratulations, team. It takes a good team to do all that. So we're excited about that. We linked this in our show notes, I believe. You can go see the award, right, Hadley? Yes, right? Okay. It's in there somewhere, guys. Go down there. You can help our podcast too, by the way. If you'd like to help us win some podcast awards, we need to get ranked higher. So you can go and wherever you listen to podcasts and hit like and subscribe and all that fun stuff.
So if you subscribe, does that help your?
I think it does. Yeah.
I would think.
Number of
Because
subscribers.
people are watching.
Big thing is to listen.
Yeah.
Just got to listen every week.
We have to be interesting.
Well, I know we have to be more interesting, maybe. 7 days. So podcasts work where they rank you by number of downloads in 7 days. After 7 days, it doesn't really matter anymore for some reason. So we're in the top 25% of all podcasts in the country because there's 600 something thousand podcasts and nobody listens to most of them. Right.
Yeah.
So we have hundreds of downloads, but we need thousands of downloads to really get that top 1%. But every year it gets bigger.
Absolutely.
So thanks for listening, guys. And congratulations to the Wiser team for working so hard every week to win major awards. I feel like we need to get that leg lamp. We'll just put it out front, and everybody's going to ask, why is there a leg lamp?
It's an award.
It's a major award. All right, so let's get started here. This was kind of a fun topic we came up with. Is instant gratification ruining your financial goals? I am probably guilty of a lot of this because I don't like waiting. I'm very impatient.
You're impatient?
I'm very impatient.
I would have never seen. I've never.
You never known that?
No.
No. I'm. If I asked for something, I wanted it yesterday, probably because I've been thinking about it for 2 days, right? So,
yeah.
But I've gotten a lot better in my older years. I think in my 20s, I was like, "Oh, we're just going to figure out how to do it. We're going to do it." And from a business standpoint, it worked.
That's a great entrepreneurial spirit
Yes.
to be able to do that. You don't have to have a lot of direction. You just go.
Yeah.
That's not a bad thing.
No. Well, just trying to figure out ways to do something that people said couldn't be done. I mean, this business model is supposed to be a fad, and it's anything but that.
No,
So
not at all.
So it has positive sides to it. All right. So let's kind of dive into this. Shawna, you did the research on this one.
Well, it's really psychology, and I'm not a psychologist, but the instant gratification world is hurting all of us, and it's, I want something now, and it's being disciplined. So it's being disciplined in your money and your health and all of it, and just having a plan and following through with that plan. So the instant gratification of, I want this now. And in this day and age, you can have this now because we have credit cards and we have money and loans, and you can do that. And some may not even see it as, hurting their long-term plan, but $20 here, $30 there, and everything's so expensive right now. And you get your credit card bill and it's explosively high, and all of a sudden you're borrowing from one to pay the other, and it can get into a really challenging situation quickly.
There's no $100 problems anymore.
No,
everything's at least $1,000. Seems like.
Oh,
until my plumber shows up at my house, I know it's gonna be at least $1,000.
Exactly. I mean, even going and buying kids clothes and stuff for school. We're going back to school right now. All of that is, and the kids are like, I want this. And how many, we live in that instant gratification world, and it's just stuff. And most of the time that stuff brings us joy for 5 seconds and then it's gone.
Yep.
And you're left with the credit card bill. So most of the time it's stuff you don't need that you're just not thinking about. And Amazon makes that really easy too. Amazon's very convenient, but all these Amazon boxes that show up at your house, it's like, oh, I want that. I want that. I want that. I want that.
Yep.
And, just not thinking about the long-term ramifications of that.
Sure.
Which is really harmful long-term to your finances, or can be.
Which creates the debt problem.
Right. So you have debt, and so you're trying to pay off this debt, which adds to your stress. And a lot of times it's a psychological need. It's not really a need. It just satisfies something. So, I want this. This makes me happy for 2 seconds, but it actually is compounding the problem, because then if you're in debt and you're stressed about that, then it's just creating more stress, which makes you want to maybe shop more or just have these instant gratifications in all aspects of your life. It starts spilling into other areas. So that mentality of having instant gratification. And so just really analyzing, is this something I need? Or is it just something that is, I want it, sacrificing for what you want now for, later, and having savings is huge. What do you want most? What do you want right now versus what do you want most? And so if you think about what you're trying to do long term and not having that stress and not having that build up, that is huge.
Yep.
Because if you're not, if you're spending and you're in debt, for example, and you may not be in debt, maybe you're not in debt, so that's not even an issue. But if you are in debt, that causes stress. Even if you're not in debt, are you using your money to the best of your ability? Because it may not always be there. You could lose your job. Somebody could get sick in your home and they don't even lose their job. They're disabled. You can have these outside things that happen all the time. And now all of a sudden you find yourself in a financial situation that you haven't planned for. And some of them we can't plan for. But if you're disciplined and you spend wisely and do all that, you will be able to mentally and financially handle those situations when they come up and be steadfast and, be able to do that. But it also hurts your long-term investing. So, being able to put money into retirement accounts or in brokerage accounts. I know we talk about all the time having those different buckets, saving for college, saving for all of these things. The more money that you have outflowing, the less money that you're saving. And so that power of compounding, I remember when I started in this industry, there was a broker that I was working with. I started when I was 18, and he was like, whatever you do, start the mutual fund right now. And I did for a minute, and then I didn't keep doing that. And I wish I would. It was a John Hancock fund, and I wish I can imagine what it would be worth now, right? And so he was so right.
Despite being a John Hancock fund.
Well, it was a mutual funds. Right. That's what it was. A broker. It was a broker dealer. Yeah, exactly. And so it doesn't mean they're all bad, but the earlier you can start, even if it's just a little bit, the better. And so if you think about that $20, $30, $100 a month, if you're not spending it, instead you're putting it into account and letting it grow for you, on average, the stock market returns 10% a year.
Right.
That's powerful, and then it's the opposite of that. And so what is it actually costing you?
Yeah.
What is it actually costing you?
Are you curious why annuities keep coming up as a potential investment option? People are often told that annuities can effectively mitigate investment risks and help secure their financial future. However, annuities often benefit the salesperson and might not be the best choice for you as a consumer. To learn more about the various types of annuities, the negatives of owning them, and better investment alternatives, we have a free ebook on our website just for you. To download our ebook, Buyer Beware, Why Do They Keep Trying to Sell You That Annuity? Simply click the link in the episode notes or visit wiserinvestor.com/guides. Now let's get back to the episode.
Because in the end, what do most people want? And most people don't. I've never really. Well, we're a wealth management firm, so we see a little different of the population, right? But most people don't walk in here and say, I want, and they list out all these material things. They typically walk in and want, I'm looking just for financial peace. I'm looking for financial security, and I make sure that I'm going to be okay long term. That's usually what they say. But then sometimes when they say that, and you look at the paper and you go, well, that's not the actions that are actually happening. And this is how you fix that, right?
Yes, completely. It's like, okay, this is what you want, but you have to take the actions to get from A to B. You have to take the actions in between to get there.
Right.
So are your habits set up and then aligned with what your goals are?
Yeah.
Because that's where it starts, is with you and your habits,
right?
So it's so interesting to see that. That parallel. You're right. They come in and it's like this.
But I think we all have to go through that experience of, we finally get what we want, and then we get it, and it's good for a hot minute, and then you're like, okay, well, what's the purpose of that? You even see that in sports sometimes. I remember in golf, I think it was David Duval who won the British Open, and then after that, you never really saw the guy again. He's like, well, I won one of the biggest tournaments in golf, and I was like, didn't really find purpose in that.
Yeah.
Where other obviously do. But he's just kind of fell off the face of the earth for a while. But material possessions are just material, right? Ultimately, they're all going to erode.
Right.
So you again, it goes. This is what I tell my kids, because I hate the word rich. When I hear some kids say that so and so is rich, I'm like, ugh, I just cringe. But there's a difference between rich people and wealthy people. So rich people have high incomes, but they spend everything. Wealth is hidden. You don't see wealth. We have guys driving up in overalls with snuff in the side of their mouth, driving a beat up Hyundai, who have $3 million in just one brokerage account, right?
Yeah.
So that wealth is hidden. You don't typically see wealth. Now, really wealthy families, you can.
Yeah.
Like my daughter's in the horse world, and you go to Lexington, Kentucky, and you see these mammoth farms, and okay, well, that's like, one
Clearly.
farm,
right?
Out of probably many, and they're just showing off their wealth. Not even that they're rich; they're just showing off their wealth. But that's the top, 0.25% of America at that point.
Yeah.
But yeah, it's just, what do you want to build? And I think it goes back to legacy too. What are you passing on to the kids? You don't have to pass on dollars, but you should pass on good habits and typically they learn by watching.
Not kids do what we do, not what we say. That's right.
Exactly.
That's exactly right. And you can change families that way. It's interesting because in our industry, we have people come in and we see all different stages, right? People coming out of college, how do we start saving, young marriages, children, going through the college phase, going through, the earning years, the retirement, and then just senior years, and then later, and it's so interesting because we're all in this accumulation phase when we're young, right? It's like all this stuff. And then when you get to the point where the kids are gone and you've been retired, and maybe you're talking about downsizing and maybe even moving into some sort of retirement community, nobody wants your stuff, and you've required all these things over the years, and they're just giving it away. And you think about how much, I don't know, how much money was spent acquiring all the stuff that nobody even wants.
Right.
Nobody wants. They have estate sales, and so it's like, does it really matter?
Yeah, not to take us off topic completely, but there's a lady here who was fired by a local firm. She's a little crazy. She is bipolar, so she's not taking care of herself. Then she does go off her rocker a little bit. She showed up at our doorstep one day and said, "I need help," and we've kind of adopted her. She has no family. Her husband passed away 13 years ago. She doesn't have kids. She doesn't have nieces or nephews. I mean, she is the last one. And I have to go up there occasionally and help her. We moved her from her home to independent living. And the home was not large, but I think they had 2 homes at one point, and they must have combined. But she won't get rid of anything. So, for example, I took my son with me to say, "Hey, this is a volunteer day," and we went up there, and she probably has 50 place settings. Yeah. She's just one person, 75 years old, 50 place settings. I found 10 gallons of Bona hardwood floor cleaner, and she doesn't even have hardwood floors anymore. And I was like, hey, Mrs. So-and-so, we should probably get rid of this. I could take it and give it to maybe our cleaners. Somebody could maybe use it. Nope. Is there something about a certain generation that those material possessions, they're not willing to get rid of because they worked for it and that's theirs. And they're at an age where they remember when they couldn't acquire any of that stuff.
Yeah.
But anyway, that's just a side note.
Or maybe memories. I don't know, but you wouldn't have memories of Bona, I suppose.
No. I hope not.
No.
If anything, you'd be wanting to get rid of it, right? But anyway, I just thought that was interesting. It's like, I think, because I'm not a hoarder. I'm the polar opposite.
Are you a minimalist?
Yes. I just don't want to deal with it. We in our house, we have a room that should be a bathroom, and that was the intention, was to add a bathroom, but it's stuff that we have to keep for some darn reason. I don't know why. And every time I have to go find something in there, I'm like, we're never going to use this.
Never.
But it'd be, I'd be divorced if I got rid of any of it. So I think about sneaking it out one item at a time, but eventually the room gets empty. And you're like, how did the room get empty? Where's my stuff? So
I'm sure they wouldn't be happy about that.
No, they wouldn't.
Well, honestly, there's ways and strategies to combat that. Setting clear financial goals, setting and sticking to a budget. That doesn't mean you can never gravitate away from it, but just remember, what you're trying to accomplish and what you're doing. So it's good to have a goal, not just randomly throwing darts, so that you know what you're shooting for. Practice delayed gratification. This will be really good for you to practice with yourself. How do you do that?
Practice delayed gratification.
Well, it's really about stopping and being mindful about what you're trying to do. I would say,
I think for me, it's always been, okay, what am I trying to do? My goal has to stare at me in the face. If it's written down and it's staring at me in the face, it's not a problem. Because I'll hyper focus on the goal. But if you start chasing rabbits and shiny objects, then you get off the track.
Well, it's delayed gratification is in anything, and it's just the way in which you live your life, right? Yeah. And so it's being disciplined. And no matter what you're doing, whether you're trying to help your health, build wealth, or, get to a certain goal, if you're trying to do something at work, just an overall goal, period.
Right.
There's little things that distract us throughout the week and the months and the years. And is it setting you away from your goal or bringing you towards it? And so just considering that and thinking about it, is this action, this habit that I'm creating? Because if I can create good habits, then that will set the stage for, for what you're trying to do, and it'll set the stage for being disciplined and, making yourself proud. It's a different mindset. It's really, taking care of yourself and thinking about what you want most versus what you want right now. It's really a mature way to, handle things, and your children are watching and your grandkids are watching. And so they're watching how you handle that.
Yep.
So it's a teaching moment too. So that's really important. Really getting to the root of the problem. Are you numbing for some reason? Is there something else going on here that you're trying to emotionally make yourself happy for? So really getting to the root of that problem, if there is a problem there. So that will help you in learning to be disciplined and all of that. Mindful spending, having good spending habits when you're out shopping. Don't go to the grocery store hungry. That's what we always say. Just having mindful habits. Is this something I really need, or just something that I want? And if if it's something you really, really want and you save up for it, okay, that's another thing. That's a goal.
Right.
But if it's just stuff that you're accumulating and then getting rid of, just being mindful of that and taking it in consideration. What am I actually going to do with this? What is the purpose? Is it really worth it? And then just understanding and having financial education on things. What does this look like? What would it look like if I took this money instead and invested? And you don't have to scrutinize every single penny, but, making sure you're paying yourself first for the long term, and saving for your goals. And if there's any extra, if there's extra you didn't plan for, then maybe do something special with that.
Right.
With the family, or something you've wanted to do, an experience maybe, instead of stuff, unless you need the stuff, obviously.
Right.
So
you think about, so we're talking to a lot of people. So I think a lot of these things are all good for young people who are just getting started, who need to stay focused on career, stay focused on building wealth, building that savings for that first home, things like that.
Right.
But I think it also applies to people who are successful and have high incomes.
Yeah.
And that what are you doing with your wealth? You know, if it's slipping away and really expensive cars and I love experiences, it builds family legacy. But what is your end goal? What are you trying to accomplish? Mm-hmm. What can be, not that you're trying to create a bunch of silver spoons, you know, for the next generation.
Yeah.
But you have to understand that the next generation is going to have it a lot harder than you had it, because the inflation. Yeah. You know, a starter home in I think 17 cities across the United States now is $1 million, which is crazy.
Wow. That is crazy.
So it's you know, in order for them to maintain a similar lifestyle, you're going to have to start building some type of legacy money. What if you get an inheritance? I mean, we obviously have our normal checklist. Let's eliminate debt, eliminate mortgages, things like that. But think about that next generation. What can you do to teach them and educate them about money and legacy, and this is why this family is different, and this is how we handle this. You're always going to have that one or two children, maybe so most people have two children, but you're going to maybe have one child that's not really good with money. Mm-hmm. And so you have to build some protection around that. But
yeah, absolutely.
But you know, just I think it goes back to, we all need goals. We all need to be working towards something.
Yeah. Otherwise, what are you're just mindlessly.
Well, that's how you and I think. Yes. And you're very goal driven. But most people, I don't think most people go through life with goals in mind. I think they're just trying to survive the day.
That's true. Right. And sometimes I think that's a mindset too, though. If you're just in survival mode, then, you know, you do just do whatever you can to get by. And so you spend this or eat this or handle this way. And you're just quickly, you know, you're, I don't want to say drowning, but maybe, you know, you're just in a, you know, trying to survive. And so being mindful, so it's switching from, you know, surviving to thriving. And, you know, what is it you really want? Do you just want to get by and just, you know, not have goals and not, you know, grow? Because if we're not in growth mode, you know, as humans, that's what we're designed to do, you know?
Right. You mentioned health at the beginning too. I mean, your journey is one that is pretty amazing. And you're really good about staying disciplined on the health front. And, you know, it could be that it's maybe less about setting goal money for, you know, goals for money. Right. It's maybe it's more for health and longevity, right, and things of that nature. So.
Absolutely.
So anyway, well, that's good conversation. Thank you, Shawna. And I think that in the end, this is where financial planning comes into play. You have to sit down. You have to write out the future. What does that future look like? What if you're okay with your retirement future, but you know, the planning process can give you permission to go do other things. Yeah. And a lot of our clients are that way. They're saving enough for retirement. They're in good shape. So what do you do with the extra dollar? And I think for a lot of people, the extra dollar is what's slipping out, and where they could be opening up a brokerage account, they could be saving, and then that money could buy a second home. It could buy maybe a third home. It could buy property to do whatever recreational you want to do, hunting or, you know, off-roading or whatever. We have people that are into all kinds of things. The RV, right?
The RV, yes.
But knowing that you're secure with your future on the retirement front. And then obviously the other parts of financial planning include protecting all that we have the right amount of insurance, that in case there's a judgment against you and all that fun stuff. But we do all that here. If you're interested in learning more about our process, you can reach out to us online at wiserinvestor.com. You can schedule 24 hours a day, a consultation with myself, with Shawna, or with Missy. And I also have a few other episodes in my notes here you might want to take a look at. Episode 221, How to Prioritize Your Financial Goals. Episode 182, Investing for the Long Haul, Creating a Retirement-Focused Investment Strategy, might be good podcast for you. Also, don't forget, we have a YouTube channel. A lot of people watch this podcast now at A Wiser Retirement in YouTube. I was at GMC dealership recently, and they have YouTube TV in the back of the cars now. So my kids don't need screens anymore. But if you bought a car that had screens in the back, it's all fed through Google.
Oh.
And I was demoing this thing, and you can go right to Google, and I typed in a wiser retirement at the dealership. So anybody buys that car, it's going to have the wiser.
There you go.
Unless it resets when you turn it off, then.
That could bring up our podcast numbers.
Yeah, I know, right? Just listen to our podcast as you're driving around. Anyway, Wiser Retirement YouTube channel. Check it out. Thanks for listening. We'll see you guys next week.